Hey guys, welcome to Brokenomics. So today we're joined by Frances Coppola, former banker, financial economist, author, blogger, and operatic singer, to discuss the issues surrounding USDT. I'm also joined by Zach of Brokenomics to weigh in on the discussion. So Frances, thanks a million for coming. Really appreciate it. And if you could just, I guess, start off by giving us a brief history of Tether.
Well, Tether emerged surprisingly long time ago, around 2014, I think it was. And it was to really create liquidity in the crypto system, in Bitcoin particularly. It can be quite hard to get dollars into the system, and can be quite hard to trade actual dollars against cryptocurrencies. And so Tether was created as a solution to that problem, to create liquidity in the system so that people didn't have to keep trading in and out of dollars. That was really its purpose.
Moving forward to the present day, the nature of Tether's reserves has come up a lot recently. So could you talk about how these are made up and what you see the issues with these as?
If I just backtrack a little bit and talk a little bit about how Tether was meant to be, was meant to operate originally a bit like what we call a currency board, whereby you have a currency, and we see this in real currencies, in fiat currencies produced by places like Hong Kong, where the amount of currency they produce in their own currency is fully backed, 100% backed by reserves in another currency, in this case, the US dollar. And it is quite strict. They can't print any more of their own currency unless they obtain an equivalent amount of reserves in the currency to which they're pegging. It's known as a currency board. Interestingly, something similar operates in Scotland, with the notes produced by the Scottish banks are fully backed, 100% backed by actual physical notes produced by the Bank of England and stored in their vaults. Not a lot of people know that. It's a type of currency board. And that's how Tether was meant to operate. And so its website originally said that every Tether was backed 1-for-1 by an actual US dollar. And they originally said they were real US dollars held in their reserves. Sometime around about 2015, 2016, Tether's sister organization, Bitfinex, suffered a hack, lost quite a lot of money. And it turned out that they had borrowed from Tether's reserves to cover their losses. And they concealed the fact, Tether concealed the fact that they had lent this money, but it did mean that that Tethers were no longer fully backed by actual US dollars or actual, Tether actually covers other currencies as well. So they kind of started changing the way they described it from fully backed by actual US dollars to just fully backed by assets held in our reserves, which is where we are now. The New York Attorney General, in its judgment over Tether, which is looking at the safety of Tether in relation to the holders of Tethers, and so how safe is it, and the things that Tether has said, actually said that Tether had effectively lied about what their reserves were made up of, because it had claimed they were made up of actual dollars, and it was evident that they weren't. And so today, actually, it's got to produce a report for the New York Attorney General of its reserve composition. Now, it actually produced a report, or what it called a report, about a week ago, consisting of 2 pie charts, which purported to be a breakdown of its reserves. And that's all it showed, was it literally just a pie chart saying what proportion of what it called its reserves, which was actually its total consolidated assets, which is not the same definition of reserves as would be used in a bank. It's actually a much wider definition of reserves than banks would use, and showed what proportion of this reserve base was made up of what type of asset, but not really with any great detail. So we had about a small proportion of actual cash, an even smaller proportion of US Treasury bills, a rather larger proportion of what they call fiduciary deposits, which are deposits made into a bank, usually a foreign bank, by another bank on behalf of that second bank's customer. That's what a fiduciary deposit is. And then a very large amount of commercial paper commercial paper is short-term debt issued by corporations. And now, if this was to be kind of a safe and liquid form of reserve backing for a currency, you would expect that to be really very blue chip, very high grade, AAA rated, whatever. They didn't give us any details at all as to the nature of this commercial paper. Their general counsel later wrote a blog post saying all their commercial paper came from issuers rated at least A2, which is at least investment grade. But that's the rating of the issuer, not the paper. Investment grade issuers can issue junk rated paper, and we don't know what Tether actually holds. We still don't know. They also hold corporate bonds. Again, we have no idea what the rating of these is. The only thing we were told there is they're not bonds from affiliates, from members of Tether's own family of companies, which includes the exchange Bitfinex. And there are some precious metals, because Tether also issues a gold-backed token, and it does hold gold reserves for those. So that's really the breakdown of what Tether calls its reserves. I did a little bit of calculation on this, because the reserve report should be seen in partnership with the monthly attestation report, proof of reserves, produced by the accountant Morkamen. There was one produced for exactly the same period as the reserve breakdown, with the 31st of March. And if you take the two together, it gives you an idea of the kind of scale you're looking at here. And when you actually take the two together, you can see that your commercial paper holding at Tether is something of the order of about $20 billion. And you do start, and you do start to wonder what kind of operation, kind of fund management operation they're running here, with reserves on that scale apparently held in these commercial instruments. So there's some questions here that I think need to be answered. It's not clear how they're running this at all. And my other concern also is that when you look at the figures, you have the Morkamen attestation basically says they had at the 31st of March around just over 40 billion of liabilities, of which the vast majority were Tether tokens, and just over 41 billion of assets, total assets, not just cash, not of which only a tiny proportion are cash. We now know. We didn't, and that is a paper-thin slice of equity. Now, if you cast your mind back to the financial crisis, what did the banks was not lack of cash, because central banks could provide that. It was insolvency. It was lack of equity, lack of capital, we call it. And so now regulators have really tightened up the capital requirements, and banks have to hold what they call tier one equity, which is essentially shareholders' funds. And that's like the cushion that protects their depositors, their creditors, against the possibility that their asset prices might fall, whether that's because of defaults or whether it's simply because of adverse market movements on the price of their assets. Right. Now, Tether's cushion, equity cushion, is like about 0.36% of its total assets. It's tiny. So if they are really holding substantial quantities of risky assets, then the Tether token holders are exposed to the risk of asset price falls. And if so, then that peg, the 1-for-1 par guarantee, can't really be regarded as credible. With a risky asset portfolio backing a token like that, the token should be trading at a discount to par.
And could we then see like a run on the, like when the English bank was run on in the early 90s, could we see a run on Tether or something like, or am I a bit off there with that description?
No, you're not off at all. And it's interesting how that run might play out, because in Tether's terms of service, it actually says that it doesn't guarantee to redeem Tethers when on demand, that if it can't redeem Tethers by realizing cash from its reserves, then it will delay redemption, or it will offer something else instead, what it calls in kind, which I would take to mean offering an alternative token, which is amazingly similar to what its sister organization Bitfinex did. provided its its US dollar depositors with a token instead of their deposits, instead of part of their deposits. And it seems to me that Tether has set up in its terms of service, its legal terms of service, the framework to allow it to do the same. So if this were a currency, what we would say is they would simply they suspend redemption.
Yeah.
Okay.
Yeah.
So if this were a currency board, for example, anybody who came and said, right, here's my Hong Kong dollar, I want to exchange it for a US dollar, might be said, the response might be not now.
The other interesting thing actually there is when you were talking about the commercial paper and the grading of it, it took me back to a moment in The Big Short when the lads went into the office of, I think it was Bear Stearns, and they said, and they were talking to this girl and she's saying, how the hell are you giving this a AAA plus rating? It's made up of crap. Like, you know what I mean? There's nothing there. And basically what she said to them was, listen, if we don't give it to them, they'll go down the street and get it somewhere else.
Yeah, I mean, they are saying that the issuers of the paper are rated by Standard & Poor's, Fitch, and so forth, which were, of course, the credit rating agencies that were giving junk AAA ratings before the financial crisis. It's fair to say the credit ratings agencies don't have a good reputation. They have been desperately trying to repair it, so they might be a little cautious about giving, say, a big crypto exchange a AAA rating, or even an A2 rating. But as I said, the problem here is the paper. That just because the issuer has an investment grade rating does not mean the paper does. In fact, if you cast your mind back to the financial crisis, it's actually kind of what happened there, even that the top rated tranches, the senior tranches, might have had AAA ratings, but the junior tranches didn't.
No, well, the lower ones,
junk even then.
Yeah, sure. The lower ones actually got AAA ratings because they were full of so much different junk that they became considered diversified.
Yeah, well, and that's a problem as well.
Like,
that you know, we say, well, we need to hold some junks to diversify our portfolio. Well, actually, there are a lot of different kinds of safe assets out there. But the kind of argument I'm hearing at the moment are along the lines of it is an absolutely whopping pile of cash. And it doesn't make sense to hold it all in the form of, say, insured bank accounts and US treasuries, because you make no money on it because interest rate is zero, which is a fair point. And it's a point I've made before about, for example, MicroStrategy's decision to diversify the treasury into Bitcoin. Again, an absolutely whopping pile of cash that wasn't earning them anything. And I can kind of see the argument as long as you can maintain your liquidity. My problem here, therefore, is the equity, the actual nature of the reserves. If you're going to diversify into risky assets, you've got to have the equity to absorb the losses, and Tether doesn't. So its strategy appears to be, we're going to run with no cash, almost no safe assets, no equity, and simply rely on essentially closing the doors and telling the punters that they have to hang on to their tokens, or relying on the exchanges to, and now that's an issue in itself, because in practice, run on Tether would play out through the exchanges. So people would dump their Tether in favor of US dollars or whatever, anything. And so if it gathered pace, then I guess the exchanges would have to suspend trading in USDT pairs. And that, I think, would bring down the entire crypto system, wouldn't it?
Oh, well, definitely. You'd see some massive moves south, I would reckon.
I think it would affect it, and I think that's an interesting point about the exchanges. I'm not sure it would. I mean, if you look at the exchanges, it's more of a trading environment on exchanges. So if you look at stuff like MetaMask and the different wallets available, plenty of people actually transact in crypto without touching USDT. You know what I mean? It's not particularly difficult to do. But I do think that was one of the points we were talking when we were having this discussion with you is, you know, unfortunately, we have now accepted this incredibly centralized and non-transparent entity as one of the top 10 cryptos and the sort of go-to for stablecoins. When if you look at projects like Frax, there's a utterly, you know, decentralized algorithmic currency that is tied to the US dollar. But unfortunately, as retail investors, we don't have a lot of power and choice in actually changing this. I feel like a large share of the responsibility lies with the exchanges in actually saying, you know, this isn't good enough. But for some reason, there doesn't seem to be any desire or will to do that, you know?
Tether seems to be acting kind of like the exchange's central bank.
Yeah.
Yeah. So, and I find it bizarre that it's just a part of Nicholas Weaver's point, I think, that you know, the crypto system has been kind of replicating the history of the financial system on fast forward, and it's created a central bank.
Yeah.
And that's how Tether is behaving. It's behaving like a central bank. And so if you actually look at its behavior and how similar it is to central bank, it actually acts quite like one, because the central bank wouldn't allow it has no, with the suspension of the gold standard, has no redemption. If you go and try and exchange your dollar for another dollar for something else, you just get given more dollars. So in that respect, the suspension of redemptions, and also the fact that Tether really doesn't allow ordinary punters to buy or sell tethers directly from it anyway. It's all for exchanges. And that's like central banks as well. They don't deal directly with the public. It's interesting that we're having a move towards central banks dealing directly with the public at the same time as crypto is busy moving away from it. But also, I think I want to pick up this whole question about reserves, because when I was looking at the Tether Reserve Report, and also the attestations as well, I was struck by this kind of conflation between total consolidated assets and reserves. Now, if you were a bank, that wouldn't be, your total asset base is not your reserves. It's much bigger than your reserves. Reserves for a bank are very narrowly defined. Reserved for a regulated bank mean their deposits at the central bank and vaulted currency. It doesn't mean anything else. In the days of the gold standard, reserves meant gold. Or at most sort of a combination of central bank notes and gold. It's a very narrow definition. So widening the definition of reserves, comparing yourself to a bank, and then widening the definition of reserves, so it's claimed that you're not a bank. And
they distance themselves quite quickly from that, doesn't it? Yeah, because they actually, if you actually applied the same definition of reserves, or a similar definition of reserves to Tether as you would to an unregulated bank, a bank that doesn't have direct access to the central bank, you would look at cash held in insured deposit accounts at regulated banks. Remember, said that shadow banks, unregulated banks, are the customers of regulated ones, basically, so they get access to clearing. So cash held in deposit accounts at regulated banks, you would count in your reserves. Things that are very, very easily exchangeable for cash. So things like sovereign, good quality sovereign debt, possibly gold, although that's prone to fluctuations. Yeah, those type of things, maybe the debt issued by very blue chip organizations, right? So those are the kinds of things that you would include. In regulated banks, the definition is even narrower than that. But for unregulated banks, for shadow banks, that would be what I would expect to see in reserves for a shadow bank, is those sorts of things. So I want to see more breakdown of that commercial paper and those corporate bonds, because I want to know what the rating of the paper is. I want to know who issued it. I want to know what their rating is. And more importantly, I want to know the rating of the paper itself. I don't think people realize that it's not just the issuer that's rated, it's the paper as well. If you actually look at Moody's, for example, they actually rate the bonds, not just the company that issued them. And that's to do with the seniority of the debt and the terms under which it's issued. So there's lots of stuff around, sort of capital ranking and things like that in there. So that's the kind of thing I would expect the New York Attorney General to be looking at, to want to see, would be that kind of breakdown. Is, do you have sufficient safe liquid assets to be able to redeem Tether, to redeem a reasonable quantity of Tethers at any one time? And that's essentially what they're looking at. And do you think we're going to see then transparency from that report? Or is it going to be like the last kind of a slap on the wrist fine and give us out a few pie charts every 3 months and we'll be happy enough with that?
I'm struggling to see how the New York Attorney General could be satisfied with what they've produced so far. But it's fair to say that that was the report that was produced for public consumption, and what they give to the New York Attorney General might be different, although they are supposed to be releasing it publicly under the terms of the judgment. It's meant to be publicly. So if they're giving different information or more information to the NYAG than they're releasing publicly, then they're arguably in breach of the
well, that bodes well.
Yeah.
For
it's not looking good.
Huh?
I mean, lots of people have poked holes in this, but I keep coming back to the same thing. The real issue here is to do with the riskiness of that portfolio and whether they have sufficient equity to absorb losses. Because if they haven't, then Tether really should be trading at a discount to US dollars. Not be on one peg. And that's the issue, really. But as you said, I mean, the mystery here is why something that kind of started out as we need to break this dependency on single points of failure, single institutions, opaque, unaccountable, centralized institutions. It's gone and created itself one.
Yeah. Well, do you know what though?
In the back, like.
But like, it's not the retail investor, or you know what I mean, your average person who did this. There's something with the exchanges. There's some way in which Tether makes their life incredibly easy. Whether it's a case of, pick up the phone, I need you to print me 500 million Tether and I need it now, and boom, it happens. Whereas if they go and talk to USDC, or they go and talk to Frax, or whatever other stablecoin, because I find it interesting as well, Binance has its own stablecoin. They have BUSD. Why are their charts not measured in BUSD? And actually, I talked to Robin about this, and he came up with a great point. He said, well, maybe if things do go bad, they can then point to this third party as the issue. This wasn't us.
Themselves of any...
Our BUSD is solvent, but we can't do anything about this USDT stuff. That's a separate entity.
Yeah, and Tether's protected itself essentially by saying nothing to do with us either. Tether it says, and you don't get anything back if you have no right to your dollars back. So however you look at it, the punters get screwed, really. Sorry about that. But I do think that Tether and big exchanges are acting as something similar to a broker-dealer network, actually. So kind of a cartel. Because we know that Tether preprints. The chief technical officer, Paolo Ardoino, and Stuart Hoegner, who's their general counsel, actually said that in an interview recently. They actually said they preprint quantities of tethers and leave them in their treasury, right? And then when their big customers come and say, can I have this many? Then they're already printed.
Okay.
Right? So, and then I guess there's an expectation that on the part of the exchanges that these tethers will always be available when they want them. And equally, they've got these things, they swap them back and forth as well. So if they have more than they want, they swap them back. So there's a very kind of close relationship, and they've all got accounts at the same settlement bank.
Fine now. So you're saying more so like there could be just to repeat again, I'm sorry for the third time.
Sorry.
Only so well.
The universe doesn't want me to say this, does it?
No.
They're hacking our...
Don't worry about it. We're editing all this out anyway. Don't worry.
So you said there would be a stop on trading across the board on Tether if there was a run on it. And then in regards to getting money out of exchanges, you were...
Yes, because the problem here, the underlying problem is not Tether, it's dollars. It's how many dollars do you have? And what Tether, remember what I said right at the start, was Tether was designed to ease liquidity problems on the exchanges caused by essentially lack of dollars or inability to obtain dollars. So if you've got a run on Tether and everybody is dumping Tether for real dollars, or is dumping Tether for something else which they then sell for real dollars. So the idea, for example, that you might dump your Tether for Bitcoin or some fiat coin then that is actually traded against dollars, and not all of them are. And then you sell that coin for dollars, right? What the exchanges are likely to do, because what they're actually facing is a run on dollars. Do you see what I mean? Is actually spend rules in dollars. In other words, you won't be able to take your dollars off the exchange into your bank account.
Wow. Yeah.
So, which is it? It's KuCoin, isn't it? Is actually regulated in the States. Is it KuCoin I'm thinking of, guys?
Yeah, Kraken.
Kraken.
Yeah.
Sorry, not KuCoin. It's
Kraken.
Kraken.
Kraken's
So
exchange. And Kraken is the weak link here, actually, because Kraken actually might find, because it is actually a bank and claims it has access to the Fed, might actually find it quite hard legally to suspend withdrawals, US dollar withdrawals, because the Fed could argue that it has no reason to do so because it has access to Fed liquidity. Right?
wow. So actually, well, yeah.
So somebody wants to start run.
Yeah.
Kraken sounds like a pretty good place to have your money then, as opposed to some of the other exchanges.
There are advantages to being a regulated bank, you know, to dealing with regulated banking.
Then surely be everybody at Kraken's doors trying to get into Kraken, trying to get out then, because that would be the one point of access out of the system.
Exactly. It would be a huge bottleneck. And I'm not sure how the Fed would see it. I mean, Kraken's banking license is issued by the state of Wyoming, so it's called a special depository institutions license. And Kraken says that it has gained access to the Fed through that license, but I'm not sure how watertight that access is. And it's also worth remembering that to get access to Fed liquidity, you actually have to have collateral. And we don't know, because we've never seen Kraken's books, what kind of collateral it has and whether the Fed would accept it and what the haircuts would be. So to what extent Kraken can get dollar liquidity if it needs it is unclear as well. So I would regard Kraken as the weak link here. On the face of it, it should not suspend withdrawals because it is a regulated bank and has access to the Fed. But on the other hand, its access to Fed liquidity might not be that watertight.
And it may not have any choice after at one stage, but two, and then the next knock-on effect is the haircut that would everybody would receive.
Like Bitfinex, which is exactly what Bitfinex did. And you remember with Bitfinex that it wasn't just people actually involved in the hack who were haircuts. It was everyone. So totally uninvolved people who had US dollar deposits on Bitfinex lost about 40%, and that was exchanged for a token called BFX token, which was later itself exchanged for a token called Leo. And it was coercive. It was this is all you're getting. You either lose your dollars or you take our token. And that is what Tether has set up in its terms and conditions. I haven't looked at the terms and conditions of the exchanges, but it is entirely possible that they too have some clause in there that says in the event of a run on dollars, we will simply suspend redemptions and you can have our tokens.
Yeah, terrifying.
And I suppose the question is then, how much is your BNB worth? You know,
how much is anything worth?
Yeah.
Take 40% off, take 60 with a haircut, whatever, who knows?
Yeah, exactly.
Well, it's like
haircuts are us. Yeah,
exactly.
Oh, I need one. We have no barbers open here in 6 months. I did a job.
I mean, the whole system is just cripplingly short of dollars. I mean, I said that was why Tether was created in the first place, was because the whole system was short of dollars. It's still short of dollars. So in the event of Tether failing, the whole system, the shortage of the dollars in the whole system is going to be exposed.
Yeah,
I mean, I don't see they've got the alternative but to shut the doors, really.
And then by extension, there'll be a run on euros and Japanese yen or whatever.
The same reason.
It'll just be a knock-on effect, and all.
Well, yes, because I mean, dollars are the center, but they also trade on-off the other major currencies as well. The ropes that tie the crypto system to the fiat system don't just rely on the US dollar, they use other currencies too. And they have become stronger in recent years. So we have several stable coins. Tether is the biggest, but we have got others, and we have others that are claiming to be fully backed by dollars and regulated and authorized. When you actually look into it, you find there's not very much detail around this. So a lot of people are saying, for example, that USDC is fully audited, and I actually went and looked at it and went, no, it's not. It says it doesn't give any more details than Tether.
So, Frances, I think we can probably chat to you for another 2 hours, but I will, to keep it on the topic of USDT, for the minute. I think thank you so much for coming on and having a chat with us. Really brilliant, fun to talk to you, and you're not the boogeyman you're painted on Twitter as. So
thank you very much.
Oh, thank you.
You're not that bad.
Oh,
I know you're a lovely lady.
pleasure.
Thanks a million, Frances.
Okay.
You're a star.
Cheers.
Cheers.
Bye.
But not actually bye-bye, because we're still here.
Yeah.